Good afternoon, everyone. Welcome to today's Wednesday market review. My name is Stock Darts, and we're going to do what we normally do on Wednesdays. We're going to take a look at the four major markets. We're going to look at the S&P 500, the NASDAQ Composite, the Dow Jones, and the Russell 2000. Once we finish looking at the markets, we'll take a quick look at the U.S. dollar. We'll look at oil, gold, and silver, and then we'll move on to chart requests. Anyone in here, if you have a chart request, feel free to add it in the chat bar, and we'll take a look at it when we get a chance. If you're watching a recording of this, you can also send me a chart request on Twitter at StockDarts, and I'll be more than happy to send you a message with whatever chart it is you're looking at if for whatever reason you're unable to ask today. If you like what you see, you can of course follow me at Twitter on StockDarts. You can also follow my videos on YouTube at StockDarts, or you can visit me at patreon.com/StockDarts, where I post weekly blog content, usually giving or outlining trade ideas as far as how I'm going to go ahead and approach the markets from week to week. We do a lot of informative stuff on there, as well as reposting videos of these Wednesday market reviews. Other than that, let's go ahead and get started. The first thing we're going to do is take a look at the S&P 500. Alright, so we're in an interesting place right now with the market. We've been in the same place now for actually about a month, which is just kind of consolidating and holding up as we try to establish what range we want to go ahead and take into the summer. The market's kind of, besides the NASDAQ, which has printed new all-time highs yet again, most of the other major market ETFs have basically been kind of stuck in neutral. It's been a case that's been really happening since the beginning of June, or the middle of June, when we kind of reached a point of resistance that was really hard to break through. You take a look at the S&P 500, and you can see that once we hit this level right around 320, the market finally started to see some selling pressure, and we had a pretty quick gap down and run on the following day. And then since then, we've been basically establishing 300 as a floor and the area just below 320 as a ceiling. And as you can see, over the last 3 days, the market has struggled once we've started to approach that area and to fill that gap. We have not quite filled the gap, although it's very close. And at this point, the next question is, are we going to follow the NASDAQ higher and try to close this gap and start challenging that 320 area again, or will the market kind of head right back down and test 300 again? And I think it's kind of up in the air right now, and that's really the case that's been in place since that first move down. We've just been basically going back and forth and have not been able to find decisive enough price action to push through that. And unfortunately, right now, I think an argument could be made for both a move through 320 and starting to make a move back up towards all-time highs, or a move right back down to 300. And I think a lot of it is probably going to depend on how the news flow continues, as well as the new earnings season, which is quickly approaching. I think next week we have some banks starting to report earnings, and then Netflix will be reporting the week after. And I think after that, then we get, once we start reaching the end of the month, we'll get all the major names like Apple and Facebook and Google, Amazon, all the big tech names that seem to drive the market nowadays. So we've got a lot of interesting potential catalysts for market movement coming up in the next couple of weeks, and it'll be interesting to see if we continue to maintain this bullish posture and start making our way upwards, or are we going to finally start to go down and establish where levels of support are. Looking at the S&P 500 in a vacuum right now, let's not even bother with the other three indices. If we were just analyzing this as a stock and trying to figure out where it wants to go next, it looks like it actually wants to go ahead and fill the gap and challenge 320. We had a nice move up, and then we kind of consolidated. And then if you'll notice, even though I have this trend line on this side, we can reappropriate it a bit. And you'll see that what we had was, we basically came back down and retested all of our moving averages as well as our breakout spot from around 300, and have actually made our way back up. And at this point, what typically happens when you have a downtrend like this and it's broken, you come up, you try to make a move towards highs. If you falter and don't make it up, then you usually come back and retest it. Unfortunately, that's what makes this a little bit difficult right now as far as trading is concerned, is that we have as much a chance for us to come back and retest 307 to 305 as we do to come up and test the 320 area. But the way we've kind of drifted back these last 3 days, it looks like the market actually wants to hold above the 20 and start making its way back up. So for the moment, I'd say that this is still a pretty bullish pattern, even though I feel like the market needs to pull back a little bit more, and I feel like there's a pretty decent chance that the market will pull back in the next few weeks. In the short term, from here to next Wednesday, it actually looks like the market has already started to pull back and doesn't really want to go down any further and wants to already start looking for a move back up to highs. Now again, we're going to see a pretty different picture as we go through the four major market indices, and it's going to give us a clear picture once we have all four of them. But as far as the SPY is concerned, this actually does not look like a bearish chart at all. It looks pretty bullish. The selling pressure has been very minimal, and the sellers have had a hard time sort of taking control of the price action, and because of that, we've kind of held up. You can see where the 20-pair moving average, even though it's starting to curl down a bit, is holding up below price, and the price is beginning to kind of stabilize at this level and look like it wants to kind of come up and start testing higher. Now, what can we do and how can we figure out where the S&P 500 is going next? Well, unfortunately, the major points of resistance or support that we can use as measuring points as to where we're going to go next are quite a bit away from price right now, right? So to the upside, we're not that far away, but still 6 or 7 points away, around 320, all the way up to maybe 325 will be resistance. And if we do rally up into that level, that doesn't mean we're out of the woods and ready to push towards new highs. It just means we're going to finally come up and retest this level from which we really kind of saw the first real impact and challenge to the bulls that we've seen since April. The market has been steadily climbing since we bottomed out in March and April, and really the first test that we've had is what we're doing right now. We had a few kind of red candles interspaced right around all the price action, but no significant sideways action until what we've seen throughout June and July. And at the moment, we go ahead and draw a little rectangle here. You'll see that what we're doing even over the last 3 days is actually kind of bullish. So this is the range we've spent since we corrected on June 11th. And as you can see, we're kind of trying to establish price action above that range. Now, we did pull back into the top of that range, but overall it looks like the market is attempting to stabilize here and make a new push up towards the 320, 325 area. All right. Now let's delete this. So we have a potential level of resistance, 320, 325, as well as target for this move that's occurring at the moment. Now, on the other side, unfortunately, the real level of support is down here around 300 to 298, which means that we're quite a bit away from that, and there's a decent amount of pullback that we can have before we can comfortably say that it's a possible buy the dip opportunity, and that maybe that we found support again. Now there is an intermediate level of support somewhere here in the 305 to 307 range, and that would be the retest of this breakout and would be a good spot to go ahead and look. If the market is continuing to be bullish but we do pull back a bit, we'll find support at this level. So there's a decent amount of support underneath the price action, and there's a very decent amount of resistance above the price action. So where does that leave us? Kind of in the same place that we've been the last couple of weeks, which is a market that's in the middle of a range and is not really favorable to trade to the long side or the short side. We've discussed this over the last several weeks now, this idea that the market is not always going to give you good trades. And I think right now we're in a difficult market that's not going to provide us easy trades, and it's unfortunate, but that's the way that's the way things work. And what we do as traders is we have to be patient and understand when we're supposed to kind of put the pedal to the metal and try to take advantage of good market conditions, and when we're supposed to kind of coast and take our foot off the pedal and kind of relax and be cautious. And I think, again, we're at a spot right now, despite the fact that we have the NASDAQ at new highs, and it looks like you're missing out on a lot of trades. The truth is that the market's not providing that many great trading opportunities right now. And as a trader, you want to be patient here. You want to be disciplined. You want to wait for better conditions. I think at the moment we're and this happens often during markets that chop back and forth. We're in what I would consider a stock picker's market, where you want to make sure you understand where money's rotating. You want to make sure where the risk and reward is favorable to your trading style, and you want to make sure that you are not trying to chase price action into highs or into lows on stocks that are overextended in one direction or the other, because the market is going to keep shifting back and forth until it gets a clear direction. And despite the fact that the NASDAQ is at new highs, I think that we can see across the board, most of the stock market is really still kind of struggling to figure out where it wants to go next, as it faces stiff resistance and strong support underneath. And until we have a break in one side or the other, we're going to continue to see the price action kind of go back and forth in both directions. And so, I think at the moment, you can see on the S&P 500, there needs to be a little bit more clarity before we can really signify or signal that we're going to continue rallying to new highs, or we're going to go back down and trade to new lows. Now, that being said, the bigger picture I think is still decently bullish. We've had a very strong move up, and this recent chart pattern actually is signifying that we want to come up and test these recent highs. Now, what happens at those highs is another case altogether, but I think overall, if I had to lean one way or the other, I'd say bullish, despite the fact that I feel with the news flow that we're seeing that it should be bearish. The chart itself is telling us bullish, which again is part of the reason why I've been pretty cautious trading over the last month, and not quite as aggressive as maybe we were a few months ago as the market was kind of continuing to climb higher. Now, in contrast to this, if we look at the NASDAQ, we'll see a completely different picture. And this is something, by the way, this is a theme that we've been on since March. Anyone that visits me on these Wednesday market streams, anyone that goes ahead and visits the Patreon page that I have up for subscribers, and even some free trades on there, you'll know that we've been hammering the text to the long side. One of the big characteristics of our market, and this stock market in particular, over the last 4 or 5 months has been the big disparity between tech stocks that benefit from us staying at home versus industrial stocks or commercial stocks or retail stocks that benefit from people being out and working and shopping and stuff like that and traveling. There's been a lot of weakness in stuff like airlines, retail stores, restaurants. There's been a lot of strength in names like Amazon, Google, Netflix, Zoom, Citrix, those kind of names that really benefit from people working at home or staying at home and using the internet more. And that, of course, is reflected pretty clearly on the Qs. This is not a pattern that's going to change anytime soon. Even when we start coming back to work, and now that we're starting to get shut down again, we're going to see a sort of an influx of new money coming back into this area. But this was a trend that was developing even before this whole coronavirus thing. And I don't think it's a trend that's going to disappear. If anything, it's only going to strengthen with the events of this year. And so, if you're still trying to figure out what to buy and what to sell, you still want to be strong on tech names, and you still want to be weak on some of the smaller cap or some of the industrial names. Now, even if the small caps and the industrial names do begin to kind of make comebacks and start to bounce and start to find bottoms, the strength is still in the tech names, and I don't think that's a pattern that's going to change anytime soon. Now, that being said, you can see what we've done over the last week. This is not a spot where you want to buy. If anything, this is a spot where you want to start taking profits and waiting for a pullback. You can see that we've had a nice 5-day move up, and then these last couple of days, we're starting to see selling pressure. We're starting to see the market stall out a bit, and is probably going to come back and test the 20 period. So, a little bit of a different chart compared to the S&P 500. The S&P 500 has already kind of drifted sideways as it headed up into resistance. The NASDAQ is only now finding resistance. However, with the strength that we're seeing in the Qs, there's plenty of room for a pullback and still maintain a strong bullish breakout. You'll notice we're well above the all-time highs that were printed earlier this year. We've already broken through them and come back and retested and then rallied past them. So at this point, the next pullback should continue to establish a new uptrend in the Qs, which would likely mean a move back to the 20-period moving average, and from there, a possible bounce continuing the move upwards. So this is a very, very different very different contrast compared to what we're seeing in the S&P 500, what we're going to see in the Dow, and what we're going to see in IWM. And at this point, like I said, we have to analyze all 4 indices as an aggregate and try to figure out what the market's doing altogether. And so as you saw with the S&P 500, it was kind of a bullish pattern, but we were still a little murky as to where we want to go next and whether we're really ready to challenge highs or whether we need to come back and establish further support. With the NASDAQ, it's clear. We've made new highs, we've established support, and we're in the process of continuing to explore higher. And despite the fact that it looks like we probably need to pull back to kind of take a breather and come back and test our moving averages, overall this is pretty bullish, and we're going to need to see some significant change in news flow, as well as maybe when we see earnings in the next couple of weeks, to make any kind of a dent on the price action on the Qs. So once again, as we've done basically over the last 3 or 4 months, keep an eye on tech for the long trades, and keep an eye on some of the weaker names we're going to see in the Dow and IWM as far as when you're looking for a move back down on the stock market. Now, what kind of levels are we looking at here? I think, again, with the Qs, it's pretty clear we've already established 237 and 238 is going to be strong support. Resistance is right where we're at, really. It's all-time highs, and it's not really very significant resistance. The only people that are down on the Qs is anyone who bought it yesterday. For the most part, everyone else that's ever bought the NASDAQ is up, right? Short-term support would be the 20-period moving averages as it comes up to meet price. And like I said, the next level of support is 237, and I don't expect us to lose this from here next week or even from here probably till the end of the month unless we start to see really ugly earnings, but that's again going to be probably in about 2 weeks time. So until then, we're ignoring the news. A lot of states are beginning to shut down again and beginning to make to force people to stay at home. In Dade County, where I live in Miami, we had a new curfew imposed again, and it's going to be kind of the case across the country as we start to see these corona cases start to surge and spike, and we start to see more people get sick again. And despite that, the NASDAQ seems to be ignoring that and moving upwards. And as traders, you got to follow the price action, not really the news. And at the moment, the price action is saying that we want to go higher, at least with the NASDAQ, and as far as the tech names are concerned. Now, again, to contrast that, let's take a look at the Dow Jones. And we'll see again a little bit of a different picture. You can see the Dow Jones again still kind of bullish in that we broke a downtrend and are trying to make our way upwards. But as you can see over the last 4 or 5 days, we've kind of just drifted sideways. We've really struggled to break the 200-period moving average. The 20 is kind of curling back down to meet the 50. And really price action is just stuck trading sideways. Again, if we look at that rectangle that we drew on the S&P 500, it's pretty evident that the Dow Jones is doing the same thing. And again, the Dow Jones has a lot of components that are going to struggle as they have a little bit more of an industrial nature and would benefit a little bit more from traders actually, or from people going back to work and energy consumption and factories being open and people traveling and stuff like that. Boeing, of course, a big component that's struggling. And so, basically the Dow Jones is still kind of struggling and trading sideways. Now, overall, there's still room for upside and downside. So just like the S&P 500, we're just stuck in a range, right? Take a look at where support is at 250. We're about 10 points above that. And resistance is maybe 270, which is maybe 15 points or so above where we are now. So we're right in the middle of the range. There's just as much potential for us to come up and fill this gap at 270 as it is to come back down and test the 50 and maybe test our previous support around 250. So overall, there isn't an edge right now. And I think that's the big thing to really pay attention to this week is that if you're looking for an edge, it's very hard to find one. Strength is in the NASDAQ, and the NASDAQ is at new highs, and risk-reward is poor. The S&P 500 and the Dow Jones maybe offer better risk-reward, but not really, because they're just stuck in the middle of a range, right? And because of that, there's really no edge right now because you can't really trade to the long side or the short side and be comfortable with what kind of exposure you have as far as risk and reward. So what we have to do in that case is we have to look for different sectors of the market that maybe aren't trading along the lines of what we're seeing on the major indices. And we'll go ahead and take a look at a few of those trades once we get to the chart requests. But for now, as you can see, we're kind of stuck in the middle. And at this point, there isn't really much more to say. The live chat is not working. When I type in there, it comes out right away. I'm not sure if it's something on your end or something with Twitch, but for me, it seems to be fine. Let me know if anything, if for whatever reason whatever you're asking for doesn't show up on there. I guess message me on Twitter again, and we'll see what happens. All right, so going back to the Dow, like I said, we're kind of stuck And I think at the moment we don't have a clear signal one direction or the other. And so, it just shows what a difference and what a disparity there is between tech names right now and the rest of the market. And I think, again, like I said, we need to see a little bit more clarity, whether we come back and retest support, which is likely going to be what happens, or whether we come up and start to fill these gaps. Again, there's almost an equal likelihood of either one. I personally favor the fact that the market is starting to pull back and it maybe needs to come back and retest a little bit more. But really, until we see a move either into the gap or move down for the next couple of days, we don't really have a great opportunity here as far as the overall markets are concerned, and trading them. All right, last up we have IWM. And again, very similar to the Dow Jones, you can see where we stand. We're already kind of pulling back a little bit further. We lost the 20 period, which is again coming down to meet the 50, which is not necessarily a bullish signal, but we do have the bullish signal of a break of this downtrend and an attempt at trying to make our way back upwards. Overall, I would say IWM is almost the same as the Dow Jones. Got rejected at the 200 period moving average, basically just trading sideways. We do have a nice uptrend, which is starting to be challenged, depending on how you want to draw this trend line. And, a lot's going to depend on whether we find support once we do pull back or once we finish pulling back. Again, still really aren't fully testing this breakout. We've kind of come back and tested the breakout point today. And if we find support again around this 137 to 135 area, then we'll probably make our way back up towards the top of this range. If we find support now at the moving averages, then we'll try to come right back up as well. And I think, like I said, with the Dow Jones and with the other one, we're in the middle of the range right now. We've got 5 points of downside and probably about 5 points of upside, and then possibly a little bit further upside if we do break past the 200, but really kind of in the middle and not in a clean spot right now as far as the market is concerned. You can see really, as we've traded sideways, the volume continues to drop, right? So we're just consolidating. There's nothing major going on right now, and we're just waiting for what the next move is going to be in one direction or the other. And like I said, it's not really clear at the moment, and so that makes it a little bit more difficult for us as traders because we don't really have a market that's moving with conviction right now. Range-bound strategies are decent right now, and like I said, being able to dig in and find areas of the market that are behaving well will help you as well as far as trying to pick out a good place to go ahead and try to trade this market. All right, and I think that basically wraps up what we want to see with the markets. I don't think there's a lot more to add. We're in basically the same place we were last week and the week prior to that, where we're just trading sideways. So keep an eye on these levels. I think IWM 135 is still an important level. If there's going to be an area of the market that loses support first, it's going to be IWM. So that's going to be a pretty important spot to watch and to see what happens. And then I think IWM to the upside is also kind of important as well, around 145. If we could break 145, I think that'll show that the other indices also want to continue making their way up towards their highs. And that'll be a good spot to watch. So keep an eye on IWM and keep an eye on the NASDAQ. I think those are the two indices right now that are giving us the best picture as far as strength and weakness is concerned, and see where they go. Now, one thing I will point out is IWM is not quite as weak as what it's been recently. So again, it's maybe showing some bullish persistence in this market. But like I said, if there's going to be an area that turns around quickly, it's going to be IWM. So watch what happens here if we pull back into the 50 and if we pull back into 135. I think those are the areas that are kind of important. Anyone else in here, if you have, just type anything in the chat just to make sure the chat's working. It seems to be working on my end, but I haven't gotten anything from Fat Boys yet, who I know wanted to type something in here. So let me see if anyone else is having trouble with the chat or not. If you are, just message it on Twitter and we'll see if it pops up on there. Okay. All right, let's take a quick look at the U.S. dollar. I think the U.S. dollar has been kind of struggling lately, as you can see. It's just trading sideways, but it's kind of losing momentum again. And looks like it's struggling and starting to look like it wants to roll right back over and start to drop again. If we look at the euro cross, And again, this chart's going to be inverse because it's measured in euros, so up is good for the euro. You can see that the euro's having a nice move versus the dollar. It's been able to break this range that we were discussing last week. We thought that this was a potential long trade as it broke through 112.5 or so. And you can see that it's done a good job of breaking through that over the last 3 days, and it's starting to make its way upwards. So the euro is once again gaining traction versus the US dollar, which of course shows a weakening US dollar as well as a strengthening euro. And I think at this point we're probably going to expect another continuation of this move up to around just below 114. And we'll see what it does from there. But overall, again, like I said, bullish for the euro, not so great for the US dollar. Now, if we look at the US versus the yen, we'll see a US dollar that's kind of stuck in neutral. The US and the yen, I think, are competing to see who could devalue their currency and who can print the most stimulus. And so, as you can see, both currencies are kind of just stuck in neutral. The US dollar is still not looking that great, in all honesty. A lot of wicks here as it's starting to struggle to kind of make its way back up. It already had a pretty weak bounce to begin with. So I'd say overall this doesn't look that great for the US dollar either. And then finally, the last chart we want to look at is the US Canadian. And again, this is not a good look for the US dollar. You can see it had a nice bounce. It actually was almost bullish, but then it kind of failed, breaking through this 136.5, 136.7, and is now making its way back down. And with today's bearish engulfing candle, looks like it wants to head lower. So I think overall we're seeing a picture of a weakening US dollar, and that should actually bode well for gold and silver, which, as we can see, has been the case. If we look at GLD, you can see that gold has exploded over the last few days, particularly with today's move, and is in the process of establishing its next leg up in this nice, strong bull market that it's had for over a year now, and almost 2 years, really. If we go back and take a look at the weekly chart, and we see where it's been, you can see it's had a very nice bull market for a while now, and it's just the next leg up on it. Silver also has followed through, although not quite as strong as GLD, but you can see it also did break through this range that we were discussing last week and is starting to make its way upwards. I think at this point, both of them are kind of extended, and it would be difficult to continue trading, to try to initiate a long trade here. But if you're long these names, considering some of the weakness we're seeing in the US dollar, there's a chance that we see maybe another continuation candle before it starts to consolidate. But gold and silver tend to consolidate in pretty wide ranges, so we'll see what ends up happening here. But nice continuation upwards for gold and silver. And then finally, the last commodity we want to look at is oil. And oil is actually up to 41, which is pretty nice for oil. We'll look at the 4-hour chart to kind of negate that big ugly candle that's going to mar the chart for a while. But as you can see, oil is making its way back up. Now, this is one that we were discussing last week, whether oil has the potential. With the economy starting to shut down again, I suspect the demand for oil is going to decrease, and I think it's going to have a hard time breaking past this 40 to 41 range, although that's what it's doing at the current moment. So, if you're looking, even here, it looked like it was going to lose momentum, and it just kind of continued upwards. So, let's keep an eye on oil. Let's see what happens as this pattern kind of materializes and finishes, kind of resolves. Oil is slowly making its way up, but as you can see, it is struggling to break past this $41.50, $42 price ticket. And we'll see what happens as it attempts another breakout. You can see it's slowly building up momentum to try to get up to that level. And we'll see whether it has enough to be able to push through that, or whether it's going to stall out yet again. If it does, we'll have a clear signal with a break of this ascending trend line and a break of the moving averages, and we'll see where it goes from there. Okay, but I think, looking at it, oil at the moment is actually still behaving in a pretty bullish manner, but I expect resistance to be pretty strong and really hard for it to break through once it starts getting into, making more headway into the low 40s, 41, 42, 43, and see where it goes from there. All right. That's basically it for oil, gold, and silver. Like I said, if anyone has a chart request, it looks like maybe the Twitch chat is having a problem because I haven't seen anything come in yet. feel free to message on Twitter if you need to. Um, I'm going to go ahead and discuss a couple charts that I was looking at, and then from there we'll see what happens if we get any kind of a chat going or not. All right, so one of the things I was looking at this week was this idea that the market is kind of ignoring some of the bad news, making it difficult to trade. But I was thinking, you know what? If we're at a spot right now where the market could either pull back or move up, it's difficult to try to find a trade that's going to work. But one thing I did look for was, well, what kind of stocks would benefit regardless of what the market's doing? And one area that I thought maybe would make sense would be to look at some of these coronavirus plays, particularly stuff like APT. These guys make masks, medical masks, and as you can see, whether the market goes up or down, if we have an influx of cases, then we're going to need masks again, and there's going to be an increased demand for it. And so one of the areas we looked at this week, and our focus on Monday was looking at some of these COVID-19 plays that have been kind of all over the place this year. And as you can see, APT had the big spike back in March and has since been trading sideways as we've gotten a much bigger supply across the board. There's a lot more masks across the country now. But as you can see, if demand starts to increase and you can see volume increasing throughout June, this looks like a play that maybe is a little bit insulated to what the market's going to do. And as you can see, it had a beautiful pullback and a nice tight base, and then a breakout confirming support over its previous resistance levels. Today's breakout is the perfect entry. Those that maybe didn't follow me, you still have possibility of getting into this play as it's just starting to get going today. And overall, this is the kind of, when I discuss this idea of looking for good risk reward, looking for sectors that rotate, this is a perfect example of it. You can see risk versus reward is perfect here. We have, what are you looking at the breakout? 1750. You're looking at maybe $1 of downside, and you're looking at $3 to $15 of upside, depending on how far this can go. So overall, it's exactly what you want to look for as far as risk reward is concerned. And even if you look at it from a technical perspective, it's doing everything that you would want out of a bullish chart. Another one we looked at is AHPI again, medical equipment. And, this one's a little bit different because it hasn't actually broken through the previous level of resistance, but it's also a sloppier level. The range isn't quite as defined as it is on APT. But again, we want the same thing. We want a range that is kind of contracting, and then we want to break outside of that range. Now, in this one of the other things I liked was the moving averages were signaling a new trend beginning. As you see, the 20-pair moving average starting to cross back over the 50. Last time that happened was way down here in the $15, $20 range, and you can see what happened with its big spike as the new trend developed. Now, this trend's probably not going to be quite the same thing, but again, risk reward in this scenario is really beneficial to those that want to go ahead and take advantage of it, because we have a clear stop out. If this trade doesn't work, we stop right underneath the price action. If the trade does work, there's potential for at least a dollar move, all the way up to maybe $7-10 of move, depending on where it goes. So, those are the kind of trades you want to try to manufacture for yourself. If you don't like what the market's doing, you have to find different areas that are giving you the right types of opportunities. And then the other trade we looked at was not a medical equipment, but one of these pharmaceutical companies looking to make a vaccine, Inovio. And as you can see, it had a very strong move yesterday and is today kind of printing an inside day, but still trying to make its way back upwards. But broke out of this little range that we were discussing. And this, again, is a stock with a lot of explosive volatility. It has the potential for some pretty big outsized moves pretty quickly, depending on where it wants to go. There's a lot of other names. There's stuff like NVAX, which had a big gap up yesterday as well. I didn't write about this one, but this is another one you want to look at. There's a lot of biotechs right now, depending on the news flow, that are either having big moves to the upside or consolidating and setting up for whatever the big news, the next big move that can occur, depending on how the news wants to treat it. So that's an area of the market that maybe you want to watch and see if you find stuff that is still setting up for you. There's a lot of biotechs that are printing decent patterns. There's a lot of interest in this area right now, and so that's an area that you could go ahead and try to trade if the market is still going to give us difficult opportunities. And so that's one spot that I've been looking at. That was my focus this week, was in some of these coronavirus plays, and is likely going to continue to be a spot that could pay some nice rewards for those that are willing to go ahead and look into them and accept the risks that are associated with some of these biotechs. Some of these biotechs can move pretty strongly in both directions, so they're not for everybody. But for those that are willing to go ahead and trade them, they offer pretty nice opportunities for risk and reward. Now, again, if you don't, then maybe some of these medical equipment companies, like APT, Lake is another one that I didn't write about, but is another one that's been performing pretty well. You can see just from 18 to 25 just over the course of the last month or so. And it's had some nice moves back and forth. And so these are some of the areas that you can look at if you're not really happy with what the market is providing us right now, as far as just regular run-of-the-mill stocks that are following the market. Because again, the market is at a spot right now. If it's not a tech name and it's not the Qs, then we're in the middle of a range and we don't really have a clear direction one way or the other. So we have to find different areas of the market that maybe have a clear direction. Okay. All right. So again, that's all I have. I'm not sure. For some reason, Twitch's chat is not working. I assume it's on Twitch's end and not mine, because it seems like everything's working fine for me. Although I haven't gotten a message on Twitter as well. So if I don't have, I guess if at this point, if you have a chart request for me, just put it on Twitter, and I'll get to it as soon as they pop up, and I'll message them on Twitter, and we can have a Twitter feed with some charts. At this point, there's not that much more left to talk about as far as the markets are concerned. Like I said, we're at a spot right now where the clarity is, we don't have good clarity on what it wants to do. And my focus right now will be these names. And as we start to head into next week with earnings, we'll get a better idea of what the market wants to do, and maybe we'll have some industries that are easier to trade. So that kind of covers it for today. Like I said, those of you that are in here, if you, for whatever reason, your messages weren't coming through on the chat, message me on Twitter. You can find us on Discord. You can ask me on there. You can email me. I'll be more than happy to give you guys whatever take I have on whatever chart you're looking at. Other than that, I hope you guys have a good rest of today, and we'll meet again on next Wednesday. Oh, you were watching the wrong video? Yep, you're an old guy. That explains why you couldn't talk to me. Well, anyway, that kind of covers it for today. Fat Boys, if you have any messages you want to send me on Twitter, I could take a look at your charts along those ends, okay? And same thing for anyone else. Like I said, hope you guys have a good rest of the week, and we'll meet again next Wednesday.